Local shares ended the first day of the financial year on a down note, with the ASX 200 down by 17 points, or around 0.25%. So the market was moving higher in early trade, but then after lunch just failed to maintain that momentum. You could make a case that there is a bit of buyer reluctance, given the fact that over the remainder of the week there's a fair bit of economic news to get through. Less so on the local front. We've got the RBA's decision tomorrow and some retail sales numbers, but it's probably more biased towards what we're expecting out of the United States. There'll be key measures of activity in the services and manufacturing sectors. There'll be the private and government measures of employment, with the non-farm payrolls figures on Friday. So all important measures that'll be providing us an up-to-date gauge of what the US economy is doing. So perhaps with the early part of the new financial year, there wasn't all that much incentive to roll up the sleeves and get involved. So as far as the various sectors were concerned, banks were lower today. We had the ANZ down by around 1.5%. Miners also a bit weaker. BHP was down by 1%. Gold miners also stood out. Gold prices were down by about 1% last week. So today, Lacklustre was down by around 3.5%. Oil prices rose last week, but a mixed set of performances from the main oil producers today. Santos was down by around 1.7%. Retail Food Group stands out. This organisation has been in the headlines from time to time for any number of reasons recently, but they had a big surge at the end of last week, up by 27% in fact on Friday. So today, in the absence of any news, a bit of give back, down by around 10%. Automotive Holdings Group today was in the headlines for the fact that a proposed sale of their refrigerated transport business won't be going ahead for the time being, at least, to a Chinese buyer. That was expected to yield $280 million, and that was a factor pushing the shares down by around 8%. The big news story of the day was that Sigma Healthcare has failed to secure an extension, if you like, of their supply contract with Chemist Warehouse, which is Australia's largest pharmacy retailer. That has seen them downgrade their earnings expectations. Next year they expect EBIT to fall from 90 million to 75. They said that in a worst case scenario it could be a little bit worse than that. So the share's down by 40%. However, on the other side of the equation, EBOS has been the successful tenderer for that contract, and they're expecting about $1 billion worth of revenue in year one. So EBOS shares were up by around 5% as a result. The Aussie dollar is a little bit weaker today. It's trading at 73.8 US cents.